Hi everyone, a very warm welcome. Good to have you with us this morning. A very misty day up here, but there we go. We are in the depths of, well, not quite in the depths of winter, but we're getting there. So to be expected, I suppose, but at least it's not too cold. Just to perhaps, I can see there are already a couple of questions coming from Ezzy, but just to highlight the, where are we? Haven't you? You have. Oops, just move that out of the way. Sorry, getting ahead of ourselves. Hopefully you can see my screen. Just to run through some basics of the funded forex program. The evaluation stage, we call it an evaluation stage. As Anna said, you have the choice of starting with, and this is all. There are no demo accounts here. This is all live money, real money accounts. So there's no demo accounts. We start with real money, and you have the choice of starting at $5,000, $10,000, or $15,000. That's your choice. We don't advise one way or the other. All we would suggest is that if you're relatively new, perhaps only just started on the education program, then perhaps you spend some time going through that first before starting at the lower level at 5,000. If you've got more experience, you can start at 10,000 or 15,000. The evaluation stage is really a two-way street, if you will. It's the opportunity for us to evaluate you as a trader, because obviously what we want you to do is to succeed and migrate up through the levels. But it's also the opportunity for you to evaluate and become comfortable with what we've put together in terms of risk and money management, which is conservative. I mean, at the end of the day, you will be trading in a conservative risk and money management environment, partly because we believe that is good for discipline, but also obviously we have to protect our capital. So there are specific rule sets within the program that you will need to understand and adhere to. But outside of that, how you wish to trade and the timeframes you wish to trade, that is entirely up to you. The evaluation stage is the only one where you have a time limit, and we've set 12 months on that. So you have plenty of time to achieve what we set in terms of a profit target, which is 6% of the initial capital. So basically on a $5,000 account, we're looking for you to achieve $300, $600 on the middle and $900 on the top one. And as I say, you have 12 months to achieve that. Once you've achieved, and there are also laid down within the evaluation stage, obviously we're looking for a minimum number of trades to be achieved within that particular level, because then that will give us a very good feel for you as a trader. And as we always say, and we've said throughout, and it's the one thing that we hammer on about in the education program itself, is consistency. This business is about consistency. It's about proving consistency over a period of time, because once you can do that, then truly the world is your oyster, because then it's just a question of gearing up. And I suppose in a nutshell, that really is what this program is about, because if you can be consistent on a $5,000 account or a $10,000 account or a $15,000 account over an extended period of time, over a couple of months, over 40, 45 trades, then you have proved to yourself that you understand this business. We have given you, if you like, the framework of discipline, but you have proved to yourself that you can do this in whatever time frame you choose, in whatever approach you choose, whether you prefer trading longer term trends, whether you're an intraday scalping trader, whether you want to hedge, doesn't matter. You can do all of that in the account. But at the end of the day, you will have proved to us and to yourself that you have the consistency to achieve success in a bigger account. And that is the point at which, once you've achieved those simple targets, we then factor up the account size by a factor of 4. So if you're on the 15,000 trading capital account, you move to 60,000, and thereafter you become what we call a portfolio manager at that level. Yep. Once you've completed the evaluation stage, which, as I say, is really about, it's all about consistency. That's all you're looking for, because if you can be consistent trading micro lots, trading mini lots, then what is the difference between trading mini lots as opposed to full lots? And the answer is nothing. The only difference is obviously you're trading much larger dollar amounts. And really that's what the program is about, is to give our students, and this is only available to students on the Quantum Trading Education program. It's not available anywhere else. And the reason we've created in that way is to give you, as a student of the program, the opportunity to then have an upgrade path to access much larger funds, to put your knowledge and skills to the test in a low risk way. The only risk to you is the initial cost of joining the program, which is very low, because when you think about it, if you're only paying a few $100s, but you're getting access to the sort of funds we've put together, it really is a no risk scenario. So once you've passed the evaluation stage, several things happen. And at the end of that period, you also get a percentage of the profits as a kickback to you. So you earn as you trade. You get a percentage of that comes back to you in a lump. And then as you move into the portfolio manager stage, where your trading capital is then multiplied by 4 and thereafter by a factor of 2. So as you move from the evaluation stage, we multiply that fund by 4. So if you're on, as I say, if you're on 15,000, it becomes 60,000. At that point, you move to a monthly return on profit. So that is simply the balance of your account every month. We take that, and that is remitted back to you at the rate of 40% of your balance of your profit on the account, and that comes back to you monthly. And the profit target on those levels is increased to 10%. On the initial evaluation account, it's 6%. On the portfolio manager levels, it's at 10%. But you are earning all the time, and that profit comes back to you on a monthly basis. Thereafter, the accounts double in size. So you go from 60,000 to 120,000, 120 to 240, 240, 480, 480, 960, and through on up to 2 million, which is the top of the tree. The risk and money management rules are consistent throughout. They are exactly the same. The only thing that changes is, as I say, the factoring of the capital, which is 4 times when you come out of evaluation level, and thereafter becomes twice. And your profit return goes to 10%, it goes to 40% once you move through to the portfolio manager stage, as opposed to 30% on the evaluation level, where it is paid as a lump sum. And those are in skeletal form the details of the program. But as I say, the reason we've put this together, it's not available anywhere else. It will only ever be available to students of our program, to give you the opportunity to move to a funded account, which you might not otherwise have access to, certainly not at the sort of levels of funding that we've put together for this particular program. You'll find all the details. If you're on the education program, you'll find there's a separate tab appeared, and you can hop over there. You can check out all the details. On that page, you will find obviously the payment links to join one of the programs. You'll also find the PDF download, which explains all the terms and conditions in detail, which you will need to sign before joining the program. So I would urge you to go and download that and read that if you are considering it. In addition to that, we've also put together 4 videos to explain the various, how the structure of the program, but also some of the key points about risk and money management. So again, I would urge you to go and read through all that, study it, understand it. And if you're looking to join, fantastic, but please read all the terms and conditions. They're not onerous, but they do explain everything in great detail for you. Let's just pop that out of the way. There we go. And you will find details obviously on the public page of Quantum Trading Education, but the details you find inside as a student will be in much greater detail, and all the other bits and pieces I've outlined there as well. Right, where are we? Let's just clear that up, straighten that up a little bit. Yesterday for us, well, I have to say, was an absolutely blisteringly a good day. We have some longer term positions in terms of all the yen pairs. We have a pretty comprehensive basket of those, plus some other risk currencies. So it was a phenomenal once the explosion started. And we were several $1,000s up on the day on those, and we're still holding those because they're longer term ones on risk, basically. I've got the CAD yen up, but you could really pick any one of the yen pairs from yesterday. And what we're expecting to see, given the volatility trigger on the daily, this is on CAD yen, as I say, we've had the volatility trigger. What are we expecting to see? Well, it's no surprise to see that we are expecting some sort of congestion. What's interesting with the volume on this particular candle is that if you consider it with this one, and we're on a daily chart here, so we can look across all this volume over here. This looks anomalous because from certainly just from a very simple price and volume perspective, we've got substantial volume here, but it's not mirrored here. Yes, this was a very volatile day once again, lots of two-way price action in it, but then for such an explosive move, we would expect to see more volume than we have here. So hence the reason, no great surprise to see that coming off. If we go over to the three futures of the YM, the NQ, and the ES, again, no surprise to see markets. This is a classic example of what Anna and I refer to as the souffle effect. You get this explosive move. It's a great opportunity to draw traders in, and then we get into the congestion phase, and maybe the whole thing just flattens off. I mean, the difference between the three, I'll cover it more in detail later on, but the difference between the three is extraordinary. We've got volatility here on the YM closed up, but a huge wick to the upper body, not a massive amount of volume, as you can see here. The NQ closed actually is seriously down, and we've got a massive telegraph pole on top of the ES as well. Again, not volume, not huge. So that really, in a nutshell, tells its own story. Let's just go through let's go over to the currency strength indicators on multiples. Let's get that out of the way. There we go. Here we go. This is on 1, 5, 10, and 15. In terms of wherever you start your day, the currency strength indicator really it teases all this apart. And you can see what's going on. I mean, you have to look at the 15-minute over here. There's an awful lot of sideways price action, a lot of flip-flopping around. Really, the only one that's moving with some strength, certainly in the faster time frames at the moment, has been the pound. What was interesting with the pound is as we came into the London Open here, and again, it's always something to look out for. You're looking for reversals. You're looking for those opportunities where a currency is likely to reverse. And as Anna said, session crossover is just a classic case. Lots of traders would have been selling the pound here. Then, of course, we come into the London Open, and what have we got? Exactly the same on the euro as well. Nice strong move higher on the pound. And it really does identify all the aspects of the currencies themselves in terms of their strength, their weakness, what's moving, what isn't moving, where to go and conduct your analysis, if you will, where to go and look for those opportunities. Are you a reversal trader? In which case, look at the extremes. Look at the extremes on the currency strength indicator. Look at the extremes on the currency matrix. Look at the extremes on the currency array. Look at the extremes on the currency heat map. I run through all four. But that's the point where you're looking for a potential reversal. You're looking to get in early. You're prepared to put more risk on the table because risk equals reward. And if you put more risk out, then you should take advantage of that payback because you're getting into those trades early. You can see the pound up here has already started to kick over in terms of 1 minute, 5 minutes. It's up into overbought, starting to roll a little bit. CAD's down here, not quite got into oversold yet. Still diving down here. It's got a little bit of way to go on 10 and up on 15 further still. So you've got the pound, you've got the Canadian here. The rest of it is flip-flopping around in here. You then go over onto the currency matrix. What have we got in the currency matrix? Let's see what we've got. Let's have a look at see what the pound's doing. Just isolate that out there. Up at the top here, we've got the New Zealand CAD. It's all a little bit mixed, but up on the slightly slower time frames, we've got the pound CAD here. So if we isolate out on the pound, you can see the strength of the buying there of the pound. If we isolate out on the pound here, we've got, you know, a full house here on what I call a full house. In other words, everything is ranked perfectly. We've got all the pound pairs where they should be. And all that's telling us loud and clear at the moment on these very fast time frames, there has been strong buying of the pound because these 6 are all at the top and this one is down at the bottom. So we know for a fact if we're trading pound or we've been involved with a pound pair, any of these pound pairs on the matrix, it's pretty much universal. The same is true here. The pound yen is a little bit of a laggard. And if we go over onto our 15-minute time frame, again, much the same picture. If we drop down onto the 1 minute, see what's happening here. This is starting to change a little bit because you've now got the pound pairs here. If this is going to continue, if these pound pairs here are going to start sliding down the ranking here, as they are indeed, you can see the pound Aussie here slipping down the bottom. What we want to see is this pound CAD also slip down the bottom, and you can see the euro pound is moving to the top. So on this matrix, we've got almost the inverse of what is going on these slightly slower time frames, which is what you expect, because what in exactly the same principles happened on the CSI. When a trend starts to develop, it will always start to change on the fastest time frame. So it will go, let's say on the 5 second, from the 5 to the 15 second to the 30 second, out to the minute, the 2 minute, 3 minute, 5 minute, 10, 15, on up through the channel. And that's just a fact of life, because on an hourly chart, you may be trading in one direction, whereas down at the coal face, if you will, the very close face to the price action itself, you are seeing the wheels within wheels concept, where tiny price action, which a scalping trader will pounce on and take maybe a handful of pips, you as a longer term 15-minute, 30-minute, hourly trader are really only seeing that as a minor pullback or a minor reversal, but they will be seeing it as a micro trend and a tradable micro trend. And that's really what this is all about. And the currency market is one of pure mean reversion, where these currencies are just on the constant move from one end to the other and back again. So in the same way on the CSI, you can look, as I say, on the currency matrix, you can look at the extremes, but you're also looking in terms of sentiment flow, because if you're seeing this effect or this effect pretty much, or this effect, you know, that is telling you that is what the broad river of sentiment is right now. Now, if this is going to change, the first place it will change is here on the minute. These will all start dropping down here. And what you'll then see over on the 5 minute, or probably on the 2 minute or 3 minute, these will start to decouple. They will start to move away. They will start to fall. Equally, the euro pound at the bottom will start to rise, Lazarus-like from the spot 28, and will start to move up the ranking ladder. And that's why using it in multiple timeframes is such a powerful concept. Now, the difference between the currency matrix and the currency array, just hop over onto the currency array. There we go. The currency array is really a different animal, and the way I always describe it is you can think of the currency matrix and the currency array in the same way that you think of the trends and the trend monitor. The trend dots work very close to the price action. The trend monitor takes a more considered view. It steps back, if you will, from the price action and gives you a longer term perspective, all things being relative. Obviously, this is on a 3 minute, 5 minute, 10 minute, and 15 minute. So it's a question of using them in that way. You're using them as different facets, if you will, of the price action to give you advanced warning on the currency matrix, and then that will be reflected on the currency array. And this is all to do with currency pairs, obviously. So if I isolate out the pounder, this is on the 3 minute, this is what we're seeing at the moment. What the array also gives you it not only gives you that sense of sentiment, it also gives you that sense of strength. Where are we seeing the strongest trend developing? We've got it in the pound CAD at the moment. You can see it pretty much here across the piece. And that's because if you go back to the CSI, that's because the pound was rising, and of all the individual currencies, the Canadian dollar was the one that was falling the most strongly in counter trend to the rally in the British pound. And that's why you're seeing what you're seeing here in terms of the strength of trend reflected most strongly in the pound CAD. And at the bottom here, we've got the euro pound, which is reasonably strong, but certainly not as strong as these particular trends here. And that in a nutshell is really how to use the three indicators from the CSI to the currency matrix, which is at the coal face, out to the currency trend, which the currency array rather, which takes a slower perspective on the trend. And then if you go right out to the currency heat map, what the currency heat map does is really pulls the whole thing together in an arrangement of two different aspects of price behavior. The timeframes across the top are self-evident, but what the cells show you are the individual data from the currency matrix, but also reflect that in terms of sentiment, in whether that is positive or negative, or we got bullish sentiment or bearish sentiment. And on the left-hand side, we then take that data and rank it in terms of a weighting, because if you think about it logically, a change in sentiment on a 1 minute time frame is not going to carry as much weight as a change in sentiment on a 15 minute time frame, or an hourly, or a daily, or a monthly. So each of these time frames carries an element of weight over here, which is why the Aussie dollar is at the top of the tree, because a lot of these cells are green. We have got spots of red, but they are not significant. The weekly is starting to change in terms of perhaps bearish, although it may be changing through and reflecting that more strongly in terms of the ripple effect from the daily here, this bullish sentiment on the daily, perhaps reducing the weekly down and even flipping it over. But you can also see the strength in terms of the monthly. So in terms of sentiment, the currency ranking down here is all weighted. So these pairs on the heat map are not going to move as fast as you would see them on the matrix, nothing like, because they carry this weighting. So an hourly change in sentiment will carry more weight than a 10-minute. And that is what is holding this up. Now, at some point in the next few days, these currencies will start to move, and it gives you an opportunity. If you're a slower term, longer term trend trader, then you're looking for opportunities for reversal in the longer term timeframes. You can certainly identify them here on the currency heat map. As I say, these may move up and down a spot or two during the day, but they're not going to hop. This is not going to move up here in the day, and that's not going to move down here. You might find this moves a slot down to 2, maybe down to 3. So it's a combination, if you will, of two aspects of the time and sentiment that is rippling through the market the whole time. The heat map gives you an instant view on sentiment as it changes through these time horizons, positive or negative. And again, it's a little bit like looking at the shift in sentiment on a matrix or an array, where this bearish sentiment is starting to ripple through. You've got the dollar Swiss here. You can start to see it ripple through. Maybe it's going to take out the 30. Maybe it's going to, increase that on the hourly, etc., etc. So you start to see this the whole time. It's just a visual display of all these various timeframes on one chart, and it also gives you the opportunity of this ranking ladder to get a feel for which currency pairs are heavily oversold or heavily overbought up at the extremes in terms of a potential reversal. Again, I can just isolate out the pound there, a little bit mixed on the pound. Let's isolate out the dollar, the Aussie. Again, we've got some mix, but again, what you expect to see here, if that positive sentiment for the Aussie is going to continue, you'd really want to see this one rise all the way up to join the brothers and sisters up here, and equally the Euro Aussie to continue falling, so that you get, in exactly the same way on the currency matrix, you get a full house. You get all these 5 up here and these 2 down the bottom. And then that is giving you a pretty strong indication that that currency in that particular matrix is pretty heavily oversold or overbought. Let's just flick those back on again. Let's go back onto the charts. Just going to switch off for a moment. All a little bit quiet at the moment. No great surprise given what went on yesterday. You can have it, as you can see the euros rising quite strong. This is on 5, I think. Yeah, it's on the 5 minute. So if we flip this over onto something like, let's have a look at euro yen, because the yen's got a little bit of a way to travel. Let's just change this over to euro yen, just to stick with the yen pairs. If I would spell. There we go, euro yen. And again, pretty much identical on the daily. Big volatility candle. Trading in a very narrow range at the moment. The VIX is down a little bit, not hugely. But again, you can see the volume inconsistency on the daily time frame. This volume is not in alignment with that sort of detail of price action. And really to just get that as a benchmark, I mean, you can look at any of these high volume candles. You know, you've got more volume here, and look at the narrowness, if you will, or the spread of that particular candle. Look at the volume on this particular candle. You know, that is price and volume in agreement. That looks okay. You know, this one, you look at this one, this was way out of whack. You know, relatively low volume, but a big spread candle. And this is what you're doing constantly the whole time. You're looking for validation. You're looking for benchmarking. You're looking across the piece, and remember, you're always comparing like with like. We're on a daily chart, so we can look at any candle here and any piece of price action and just get a perspective on it. So if I pull this all the way out just to see if we've got any higher volume here, we've even got higher volume here on you know, much more contained price action. So it's just giving you a heads up that this is it was an opportunity for the market makers to make some huge bucks yesterday, and the expectation of what is like to happen today is that at the very least we're going to see the souffle effect coming into its own. There's going to be quite a bit of congestion going on, sideways price action, really not a lot of follow through in terms of major price moves, and it's a question of just picking out the opportunities as they come along, because we are in a fairly congested region at the moment. You can see here on 5, you know, these are all traveling in the same direction. So really the only opportunities at the moment are on Euro CAD perhaps, but the CAD's now getting down into oversold. Pound moves, you know, coming to an exhaustion point up on the overbought region. So that one's going to be coming up to a pause point, but you'd be up and down the time frames all the way. Let me just pass back to Anna for a moment.
Okay, while David was talking, I just go back to my clutch of indicator and let's put the pound back up. I said earlier that the pound was certainly in an overbought, if you like, but we can see here it's actually ticking back up, and looking at the matrix, it's the numbers are certainly moving up a little bit more. And I've, you know, prompted to go and have a closer look at certainly the pound yen, and just to see what the euro dollar's been doing. Well, it's clearly been moving higher, but if you remember the value, it was only plus sort of 8 or 9, and now it's plus what's it called? Oh, plus 11. It's on the move. And the other thing is to bear in mind is when the values are in the middle, it also tells you that they're probably in congestion, and you know, if they start to move, great. There is the potential for a trading opportunity. But what's nice about the pound yen, there's all sorts of lessons for us. Here we are. Right, let's start with the daily chart. what do we have here? Well, we have this enormous candle from yesterday, triggered the volatility indicator that we can see here. Now, what it also does when it triggers the volatility is it gives us very important, resistance and support levels by virtue of the fact that it's such an important so much volatility has gone into this candle. I mean, obviously, we always look at the daily highs and lows anyway, but with volatility in all the time frames, you get another important, significant level, if you like, of support and resistance. But again, look at the volume under that candle. Yeah, it's high, but given the range of the candle, it's a little bit, it's as David said, you've got to, markets have this habit of putting on a big fireworks show, but that's all it is. Once the fireworks die down, there's no substance behind it. From a trading perspective, you have got to, as I said, just see if you see a trading opportunity in the time frame that you're trading, and it can be sometimes against possibly what you've got in the back of your mind that you've read around, and markets shouldn't, the should have, would have, could have, perhaps it shouldn't be doing this. You've got to park it, you've got to hold it in your head, but keep it to one side. It's called cognitive dissonance. You've got to sometimes hold contradictory thoughts in your head, and that's really, I think, what makes trading can be so difficult, because what you see on the chart is you think, oh my goodness, is that absolutely, is that true? But I've read this, that, and the other. It's the way our brain works. Our brain is always trying to keep us safe. It doesn't want you to, to take on risk, as it were. And we know trading can be risky. So there we are. So that's yesterday's candle. So where are we at the moment? Well, the volatility candle, we had the retrace to within the spread of the candle, and now it's trying to creep higher. So that's the state of play for the daily chart. Looking, because I'm down at the faster time frames, just go onto the hourly. This is the hourly, using the Camarilla indicator to tell me what are the significant levels. And because of the strength of the move yesterday, it's actually blown through all my levels, because these levels on the hourly chart stay here all week. They've been chewed through in the space of a day, in the space of a couple of sessions. But no matter, if this is going to reverse, they're going to come into play on the way down, as it were. This is the R6, this is the last level, and as you can see here, it's where it's trying to base at the moment, and it's trying to break free from the R6. You say, well, if that's the weekly ones, what's happening on a daily basis? Well, the good thing about this indicator is that the daily ones are actually refreshed every day. So if we move down to, say, the 10-minute chart, and let's see where we are. As I said, it's quite interesting. It's between the S1 and the R1. This is what we call a kind of neutral zone, a kind of buffer zone. It's kind of moving, as I said, it's moving sideways, possibly with a slight bias to the upside. We know there's a bit of buying coming into the pound based on the hourly chart. I actually have the CSI at the bottom, which is quite useful for those of you who have the indicators. If you just take out all the other currencies, but just keep the pair itself. Now, what's interesting about this, about the moves that we can see on the CSI, is this is creeping higher, but it's not really creeping higher because of the pound, because the pound is kind of turning down a little bit. It's really being driven more by the yen moving lower, which you can get. What we really like to see in a good strong move is when we see a move like this: strong move higher with the pound, strong move lower with on the yen side. So you've got equal force, if you like, and you've got a half decent trend. And possibly a trend that you can then join. And how do you join a trend? Well, you look at a pullback, you look at a correction, you see, is it purely a correction? And we establish that by looking at the volume. And I'll show you, I think there's an example on the 3-minute chart if it hasn't moved away. it's pretty much as straightforward as that. And those of you who are on the program will know, you know, that what the program does, it goes into a much deeper look into Wyckoff and really what we mean by primary trends and secondary trends. If you can really understand what to look out for in a primary trend, then in a secondary trend, a micro trend, what we call a pullback, a correction. Now, as David mentioned earlier, depending on your time frame, that micro trend, that pullback, that correction on a seconds chart, on a very fast chart, it could be a trading opportunity for another trader. And what the CSI also does for you, preceding this divergence that we saw here, we see the line sort of just moving sideways in parallels, and that tells us that this is the congestion, and we can see the congestion at around the S1 here. But being between the R1 and the R1 and the S1, it is in this what we call this buffer zone. It's basically moving sideways, if you like. And what we have here, let's have a look. This is the 3-minute chart, exactly reflecting what we see on the 10. We've got our support and resistance clearly marked as we have here. So it's not, you know, it's looking for some direction. It's got a slight upwards bias because, as I said, it's more selling of yen rather than buying of British pound. And I mentioned earlier using a non-time-based chart, and this is using a Renko. I think this is set at 3 pips. It will help you with your entries, certainly with your entries. And the entry, the very rule is very simple. You look at the structure of the price action, and you know, coming out of a congestion or a reversal, which we have here, you look for a match, the trend dot and the trend monitor moving into the same strong color, and this would have been the entry here at the moment. And this is what I mean by the little pullback. The Renko will catch the corrections. As we can see here, we had three red down candles. The trend dot goes into this neutral. It's 3 colors. It's actually blue, obviously, for bullish, red for bearish, but it's this in between color, the gray, which comes out when this is when we have a congestion or a pullback. But the trend monitor stays blue, and it looks like it is going to be moving higher. So if I just reduce that down, we can see a little bit more with the Renko. And if we look over to the left, let's just take it down a bit more, it also marks the significant points of support and resistance, which it's obviously got to get through. Clearly over here, for it to move higher, it's got to break this high here, which was from earlier today. So looking at those 3, but it's a bit of a crawl, and it's a bit of a crawl. We know why it's a bit of a crawl. The values are very low on the matrix. You're going to have to be a little patient. If you're not in it at the moment, then you know, you perhaps wait until certainly it gets to the R1 and see whether it is going to continue higher. But you really want to see, you know, some strength coming into the pound, not just, you know, necessarily wait for continued weakness in the yen. It's a judgment call. What the multiple time frames will tell you is what is happening generally with this particular pair. The individual indicators that we've developed will give you more information, and you really sort of put it all together in a way that that suits your, as I said, your trading style. So I'm going to keep an eye on that, as I said. But the one thing that I know, it's not like yesterday. This is not going to be charging up higher at the moment until we have, you know, unless there is some other wonderful news coming onto the market. And of course, if we have a reversal, because who knows, hopefully not, they come through and they say, well, actually it was just a press release, you know, it's sorry, but you know, we need more tests. It's not going to be available for another 6 or 7 weeks. As you've probably read the media, they're all talking about, you know, can this all be done, you know, in a matter of days and weeks, but we shall see. Right, so can I just pass back to you, David? Is that it?
Just flipped over onto my screen. Hopefully you can see that okay. I've just moved across to Euro CAD, picking up a nice reversal trade here on the Euro moving lower and the CAD hopefully moving higher. And we're starting to see that reflected in terms of the 1 minute, 3 minute. And you can see the weakness coming in here on the 5 minute in terms of VPA as the market moves higher, volume falling away. So it's giving a sense of a potential reversal setup, and also reinforced by the fact that Euro was getting up into overbought. Canadian was down here and oversold, so an opportunity. It's where my eye is always drawn to the extremes, because I'm always looking for reversal opportunities because they get me into the trend early, which is why I do it all the time. Okay, where do you find all the indicators? Here at quantumtrading.com. Oh, excuse me. Sorry about that. At quantumtrading.com. MT45, NinjaTrader 7.8, and TradingViewer. Remember, if you invest, whether you buy one or the complete package, if you buy the complete package, you also get all the future indicators we develop. So it's a great reason to invest in the full package. As I say, you get anything we develop for any platform as it comes onto that particular platform. You get that added free of charge. And some of the customers who've been with us for many years, they've benefited hugely by 6, 7, or 8 indicators on each, so they've saved themselves an absolute ton of money. So it's a great way to get started. And that also applies whether you start on the easy payment program, if you buy the full package on EPP, or if you buy it outright. So it applies either way. TradeStation's coming. It's been coming for a long time, but I think I'm fairly safe in saying that we are looking to have that rolled out sometime next week. Don't hold me to that, but that's what it's looking like at the moment. All things being equal and everything crossed. So that is on its way. There'll be 2 versions, TradeStation 9.5, which is the relationship with interactive brokers, so you can trade a deep discount brokerage through the TradeStation interface, or you have TradeStation Securities, which is version 10 and above. Fantastic platform, very exciting. Radar screen's a terrific product as well, which really brings it all together in a very exciting way. So can't wait to get that launched. We will be doing individual or separate webinars with TradeStation only, looking much more at stocks. We're going to be doing lots on intraday day trading on stocks, and also in terms of time and sales and level 2 data and that sort of type of thing as well. So we're doing a lot more work on that on the TradeStation platform. In terms of Anna, you can find all the details on the analysis over at Anna's site. You can find all the books there. They're all up on Amazon, either in Kindle or paperback. And finally, to the education program, that's the Quantum Trading Education Program. That's the new front page. And it now gives you the opportunity as a student of ours to trade a funded program. It's something we've planned for a long time. We wanted to bolt it in because we feel it now gives a complete roadmap, if you will, for your education, and it gives you the chance to really put that knowledge. We want you to succeed. It's as simple as that. It's why we've done it this way. We want you to succeed. We want to give you the opportunity to take that knowledge from the program, which is comprehensive in the extreme. It gives you all the understanding, you have all the tools and indicators, and to give you an upgrade path where you can actually put that to effect and start earning a return on that knowledge, if you will. You start to earn profits. We pay you back the profits. It is on the MT4 program. We've done that for many reasons, but it is MT4 only. But you have that upgrade path to really put that knowledge and skills to the test. We want you to succeed, and we've created this opportunity in a conservative risk environment, which I hope you will feel comfortable working in, and we certainly feel comfortable in having you there. And it's a win-win. You earn, we see you progress, and you then have the opportunity to move up the program into the other levels. But before you join, please do read all the details. If you are a student of the program already, you will find a dedicated page. There's 4 videos there. The PDF, please download it and read it, and just go through it in detail and make sure you understand what it's all about. But it's been designed for you, to give you an opportunity to take that knowledge and profit accordingly. The program is down here, as I'm sure you know. I know we've got some students here this morning. The psychology trading module, it really lays out in great detail. We urge students to start with that for one simple reason. because if you understand yourself, you will give yourself a much greater chance of success in this business. So it is detailed, it is comprehensive. There are 8 PDFs associated with that. Then you've got a huge fundamental analysis module, the same on relational analysis, understanding or how these markets are interrelated, of which the Forex market sits at the heart of everything, and the technical analysis module, which is a deep dive into VPA and takes the book and the essence of VPA and really takes you to another level on that. And then you have the mechanics of trading module, which is all about all the various tactics, risk and money management, timing, developing your trading plan, all those sorts of things, keeping a log, everything else. And then you have over 250 hours of video down here as well, podcasts, videos, what have you. And I think in terms of overall lessons, I think there's something like 400 or 450 lessons. It is a comprehensive program. It is the gold standard. That's why we feel comfortable in bolting on the Forex funded program, the funded Forex program, for you to take your opportunities that you've learned in there and put them to the test and start getting a return. That's it. We will run. We've got to take Bertie out for a walk. Hope you've enjoyed today. Thanks a lot for coming along today, and enjoy the rest of the trading session. Looks a little bit stagnant at the moment, but hopefully it'll pick up later on. We will see you same time next week at 7:45 UK time, or we will see you later on this afternoon in the US session at 3 o'clock UK time. So thanks for coming. See you soon, and bye for now.